happy faces, but not so happy numbers with the closing bell of the New York Stock Exchange. Stock spent the day trading in the red throughout, the Dow Jones falling about 250 points.
Similar story with the S&P 500 and the NASDAQ, both down about 7% today. Not encouraging numbers. Let's discuss it all with Carol Schleif. She's the Chief Investment Officer at the wealth management firm BMO Family Office. Carol, we've been talking all day about the U.S. reaching its debt limit, maxing out the credit card. Is that the force behind the reluctance on Wall Street today, or are there some other things at play?
I think that's the primary driver behind what's going on. The market tried desperately to rally several different times through the day and got up there to only down 100 or so. And so really trying to find its footing. We actually saw a tad bit of the risk on trade back coming with some of the performance in the tech names. But it's going to be tough for that market to make much headway to the upside, especially with that debt ceiling debate looming. And we, as you mentioned, we did hit the debt ceiling today, but there's a lot of machinations and things that can go on behind the scenes before we really pinch, so that everyday citizens are going to feel it.
Yeah, right. So I just want to quickly clarify, because I made a mistake. The S&P and NASDAQ down 0.7%, just so nobody
goes crazy.
Yeah,
thinking
just to clarify.
Right. So, Carol, to your point, do you expect that we'll continue to see more market days like this while Republicans and Democrats can't decide on what to do about the debt ceiling? And do you think that that means that Americans will actually feel these effects?
On the one hand, I do think that economic overhang stays there while we do play the proverbial game of chicken with them teeing off in terms of where their lines are and where the rhetoric is. And unfortunately, from what I understand, we really won't have a clear read on when the actual date is that we bump up against all of the machinations behind the scenes. Being done until after April 15th. They need to know exactly what kind of tax receipts we get in. And so either we get used to as investors the fact that this is going to go on for some length of time. It's happened before. We always resolve it. We typically always take it right up to the edge and then resolve it. So we either learn to live with that ambiguity on that side and focus on just getting on with our day-to-day lives. And there are things, the most interesting thing is for the first time in 20 years, you get paid to sit in cash. So there's certain things that investors can do. I saw another report go through today that some home builders are offering 3% kinds of mortgages because they're trying to move inventory that they built on spec.
That's interesting.
Wouldn't that be interesting? So yeah. I think that for the average citizen is, don't lock up and just assume the headlines prevent you from doing everything. Poke around, look in your local market, and pay attention to what's going on because there are areas and pockets of opportunity.
Well, Carol, talk to us more about that. You know, folks are wondering where some opportunities may present themselves over these next few months, because we do expect this debate to linger on until the very last minute. What do you advise folks to do? What are you doing with your money?
Well, and we stay diversified across a variety of different asset classes. One of the things we're looking hard at, too, and that you've seen a lot of money flow out of domestic stocks for the first time in a very long time, and looking at more global issues, looking at emerging markets, because trying to assess the China reopening and what does that mean. And granted, in the short run, it means they have a lot of ill people, but it also means they have a lot of people with that same pent-up demand to travel and spend that we had in the U.S. over the last couple of years. So once they get healthy, there's that opportunity to drive emerging markets. And so you're seeing money flow more globally than you have for some period of time.
Very interesting stuff. Many things to consider there. Carol Schleif, thank you.
Thank you.